and I want to start by saying we're very proud of our investment in Net Zero Nitrogen, and Justin and his team. The potential impact of his solution is really huge, so we're really excited about that. So Zero Carbon Capital, we're a pre-seed and seed stage investor, and we focus on investing in science solutions that are tackling the hardest problems in decarbonization. So we invest in hard tech only, and that's what I'll be talking to you about today. So the reason we've chosen this as our focus is because we need scientific innovation to solve the challenges of carbon emissions and to get to net zero. We also see it as a huge financial potential. So we'll be investing in really disruptive technologies to make that transition. Also, we see a gap. So as Juliet mentioned, there's a gap in funding in venture capital for hard tech. So why are hard tech VCs so rare? Today I'll be talking about some of the challenges in investing in hard tech. So namely, I'll be talking about the technical complexity, the capital intensity, and longer timelines. At Zero Carbon Capital, we think that these don't have to be barriers for investing in hard tech. So I'll start with the technical complexity. So the issue here is that scientific innovations are really hard to assess. So it's hard to assess their feasibility, their scalability, and their risks. And it's also hard to compare one technology against another. But the solution here is to build expertise. So hire scientists. So at Zero Carbon, we're all scientists by background, and a lot of the hard tech investors we know have hired scientists and people with domain expertise. We also consult with technical experts, consulting firms, or direct work. Does it sound okay? Thank you. And also it's important to co-invest and collaborate with other hard tech investors and industry-focused investors. So there you build collective expertise your companies. So in terms of capital intensity, we know that hard tech takes a lot of capital in the early stages, as well as the later stages. So to build labs and equipment, and then later for scale up and manufacturing. But the common misconception here is that your investment money will always go to large manufacturing facility and first-of-a-kind production plants. But actually, that's not always the case. So there's a range of profiles when it comes to hard tech companies, and a range of ways to mitigate and manage the capital intensity. So to start with, for example, you can have platform technologies with a licensing model. You can have companies that choose to go with a contract manufacturer to de-risk the early stages and do low volumes before they build their own manufacturing plant. And then you can get companies who do joint ventures. So that means they're collaborating with big corporates when they get to the manufacturing stage. Also, it's important that to consult with experts on this. Sorry, Anne. So the point of this broad range of profiles in terms of hard tech companies is that you invest with the portfolio approach, and so you de-risk in that sense. Also, it's important to remember that capital is available from a wide range of sources for hard tech companies. So everything from government funding to early stage funds like us to the bigger later stage funds like Breakthrough Energy Ventures. And also later on, things like corporate venture capital, venture debt, and project financing. Of course, it would be great, though, to see a lot more capital going into hard tech. So in terms of longer timelines, we know that it can take long for hard tech companies to reach market and revenue. So it is important for hard tech investors to have a patient mindset with this. We also know that hard tech investments can take longer to exit. But at Zero Carbon, we don't believe that this is an issue in terms of making investments. And there are a couple of reasons for this. So firstly, we will be able to sell our shares in our early stage fund. So we'll be able to sell the shares in our best performing portfolio companies to later stage investors. So once these companies reach sort of Series D and C rounds and beyond, then we'll be able to exit and hopefully return our fund and then focus our efforts again on the earlier stage companies for their science de-risking. and at the same time passing on the baton to later stage investors. And also, a lot of our companies will be acquired within a reasonable 10-year timescale. So at Zero Carbon Capital, we have the same fund lifetime as a traditional venture capital fund of 10 years. And we will see acquisitions in that time frame as well. And some of these will be from our very fast-moving hard tech companies, and some might even be pre-revenue acquisitions. And we've seen this already. It's quite common in the biotech sector. So another thing to mention is that there are some hard tech funds with longer fund lifetimes, and there are some who have an evergreen structure. And this type of patient capital is also really important for hard tech startups. So in case you're still not convinced and think that investing in hard tech is too risky, let's think about the history of venture capital. So venture capital grew alongside the semiconductor industry in the 1960s. This is hard tech, and it was the high growth sector of the time. Also, the pharmaceutical and medtech VC industry has been incredibly successful in investing in scientific innovation and hard tech. And finally, we've already had some really great successes in hard tech for climate. So Tesla, Sonnen, Oxford PV, Lilac Solutions, and others. So the purpose of venture capital is to back high growth startup companies. And at Zero Carbon, we believe that hard tech, science-based startup companies working on climate are high growth companies. And in fact, we think that these will be some of the most important high growth companies of our time. So I hope you have a better understanding of how we do investment in hard tech. And thank you for listening.